The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the July 7th Magical Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone had a fantastic July 4th holiday weekend. Let's make sure that you and I, that we do all that we can do today to have a magnificent and magical Monday. Now, I'll do everything I can during the next couple hours to teach you how to master the tools for trading, and that includes the tools of the mind. Because when you and I, when we master the tools of our mind, we begin to think like a strategist. And that's really important as it applies to every aspect of our life, especially trading. Now, some of the tactics that we use or that I discuss here in technical analysis, A to B equals CD patterns. That's our lightning bolt pattern. We'll take a look at that today. We look at Fibonacci expansions and retracements to identify likely floors where prices traveling to. Those help us to. Both those tools are what really create the Gartley and butterfly patterns. And, of course, we use Japanese candlesticks because these are the signs that the bulls and the bears make for you and I each and every trading session. And unlike most traders who focus only on tactics, you and I know that to really achieve our goals, to really achieve our dreams, we've got to always think like a strategist. Now, the real key to trading and investing, the real key to get our money to work harder for us than we do for it, is to have a strategy. And that's what I call Mastering Probability. It's also the name of my daily newsletter service here, available at TFNN.com. You can go test drive that for the next 30 days. Just click on my name on the homepage of TFNN.com. That'll take you to the site to be able to do that. And let's do this. Let's do this today and every day. Let's do all we can do to think like a strategist, because strategists, they'll slay the tactician all day long. Now, let's take a moment. Let's review one of our tools, a tool that I consider something that helps us to lead an inspired life. It's a tool I call bouncing back with self-encouragement. Now, questions control our focus, but question, has this ever happened to you? You know, you've got an exciting goal in mind. You've done your homework. You think you're totally prepared, and boom, just like the fireworks. Except in this case here, things just don't work out. I don't know about you, but I know I've had that experience more times than I like, but it's just what happens in life. You know, when you believe you're doing the right thing and it just didn't work out. In many instances, you may have even burned the midnight oil day after day, but that didn't help. Folks, these are the times when you have to be your own best cheerleader. And the two best ways to keep yourself encouraged: number one, take responsibility for the missed opportunity and know that this lost opportunity just sets you up to take advantage of the next good opportunity. Simply study your mistakes and learn from them and take advantage of the next opportunity. After all, that may be the real gift anyway. Always remember this. You should write this down. You should pass this along to everyone. Remember this. Things happen for us, not to us. Things happen for us, not to us. That's how you get the opportunity to take advantage of the next opportunity. Number two, don't get down on yourself and don't beat yourself up. Life's hard enough as it is. And if life is beating you up, don't make things worse by beating yourself up too. After all, it's really that next opportunity that matters, not the last one. The last one only matters in that we need to learn from it. So I promise you this. There's a gift that comes from that last opportunity. But here's the deal. Be your own cheerleader, because we can't hope that someone else will come along and cheer us up. We have only ourself to rely upon. You know, there's an old cowboy saying that goes like this: fall off a horse 7 times, and you're a real cowboy. If you fall off your horse, folks, get back up. If you fall off track, get back on track. Get back on that horse and cheer yourself to victory. That's how we bounce back with self-encouragement. It is Magnificent Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we take a look at the futures market out here. We got the Dow futures trading off 36 points, trading out at 16,938. S&P futures off about 5 points, trade at 1972.75. NASDAQ futures off 8 at 3907.75. Russell 2000 down about 4.5, trading at 1198. And change out here. Goldilocks back $5 this morning. She's trading out at $13.15. Silver down 15 cents right now, trading out at $20.98. Light sweet crude back 31 pennies, trading at 103.75. Our call-in number is 877-927-6648. Give us a call, folks. Happy to take your question. Let's take a quick peek around the globe, see what we have going on out here right now. The FTSE off 33 points, down 0.5%. The DAX off 55 points. In Asia last night, the Nikkei off 57 points. The Hang Seng down 5. The Shanghai was completely flat out here. You know, unlike days when we normally start by taking a look at the futures market, not that we won't do that, let's go take a look. What's interesting here, one of the interesting charts that I see out here, let me switch to this new another charting service out here. Give me a moment here to pull that up. Let's take a look at the FTSE. So we're going to put the FTSE up here. This is the Ensign Windows software package. All my data feed for feeding all the applications that you see out here, that comes from eSignal. And what's interesting about the FTSE, if you're watching this on TigerTV, and I hope you are, if you're listening to your mobile device, your radio if you're listening on the radio, your mobile device at TFNN.mobi, we absolutely appreciate that. Remember, the archive of this show is on Channel 9. You can always catch this live streaming to your mobile device by going to the homepage of TFNN.com. Upper right-hand side, you'll see a little button. Click on that. 3 little smartphone devices. You'll see this chart that we're looking at here. And, of course, we also have the Tigers Den out there. You can see this chart in HD. Now, the FTSE, if you take it back to October in 2013, October 11th to be specific, that began and formed the bottom of a consolidation. You know, markets are doing one of 3 things. We're trying to do one of 2 things. We're trying to get the market right. Markets are either moving sideways into consolidation, which is a beautiful pattern out there. You want to be able to identify those patterns, and you're looking for breakouts or breakdowns, or markets are either trending higher or trending lower. In this case here, when we take a look at the FTSE, there's no question that it's been in a sideways consolidation. Now, the cool thing about this pattern is that when it does break, and it will break at some point in time out here, it's a 430-point move out there. Now, what's interesting about Friday's action, what's interesting about today's action out here inside of the FTSE, the top of the consolidation box is where it's trading into. Now, the top of the consolidation box, we use these as guidelines, you know, like Captain Barbossa would tell Jack Sparrow or something like that. We take a look at the top of the consolidation being at 68.65. Those are our guidelines. We've seen intraday spikes. We saw this little key reversal session that took place back in May 15, 2014 out here inside of the FTSE. What's a key reversal session? It's where you see a change in trend take place, a change in trend. Why? Because you were in extended condition. I like to take a look at extended conditions with different patterns out there, certainly using the 14-period relative strength indicator. That helps us to identify things are extended as it gets up towards that overbought zone. Getting up towards the top of a consolidation says it can be extended as well. We see the intra-session price was above and below the prior session. Well, in this case here, turned out to be a bearish engulfing candle and engulfed the prior 2 sessions as well. That says that in order for that 430-point consolidation to take effect, in my opinion, inside the FTSE, you're going to need to see some kind of wide-ranging bar getting above that May 15th high out there, 68.94.88. Why do I say wide-ranging bar? Like a bar, unlike the kind of bar that maybe you might have spent a little time in this weekend, a bar we take a look at stock trading out here, very significant. Small little bar, small little body, the body of the candle, the bar of that candle really is the essence of price out here. And you want to see, that level taken out with conviction. If it can't take it out, well, what it really offers us is price probably moving back down into its most recent swing point, and that's the June 26th area. If the FTSE, now I'm not saying that it's going to, I can just tell you what we want to pay attention to. If it closes below 67.01.59, you see, when price can't break up to the upside, it tries to break things down to the downside out here, but its target area becomes the next swing point. Why? Because it's where price stopped during its last decline, in this case here. However, if price were to ever close below 626, the June 26, 2014 low, 67.01.59, a lot of sixes out there, then what it says is price probably moves all the way back down to the bottom of the consolidation. That bottom of the consolidation range in the 6,400-ish type area out there. So that's one of the most interesting charts that I see out here. If I take a look at other charts that we should look at, so let's go jump into the futures contracts. Let's go take a look at the Dow futures. Dow futures right now, they're trading down 35 points. What's it mean? Well, what's it mean on different time frames? Let's take a look at the daily chart out here. Let's take a look at our market profiles. Now, what we know about the Dow futures is they broke out above a resistance area, much like if you're driving down the expressway and you run into traffic, you can't wait to get outside of that congestion area, outside of that traffic, so that you can open it all up. Well, the Dow did that. The Dow finally did that. It had been lagging out here. The Dow finally did that back here in the trading session of Thursday, July 3rd. You know, we had a nice move out there. Dow futures, what we're looking at out here, got above 16,889. Did it with some conviction. Not the widest of ranging bars. Mark was only open for a few hours out there. Nonetheless, it is above 16,889. So long as the Dow futures stay above 16,889, the daily chart says bullish out here. Where can that price take us to in a move? Well, that's where we take a look at that lightning bolt pattern, that A to B equals CD. If you watch us on TigerTV, the first A to B equals CD pattern, the one we should really be paying attention to is the one coming off the lows in February 5th, 2014. The low out there is at a price point of 15,137. Makes a run up to what we consider to be a B point, a swing point out here that took place on April the 4th. Price backs off, makes a 50% retracement out there. Typically, retracements are between the 0.382, 0.618, 0.786. This only makes a 50% retracement out here. And then what we have is we've got a break above the resistance zone. This says that the Dow futures want to trade to the 17,174 level out here. So long as 16,889 holds, that's what price wants to do. Does it have to happen today? No. Does it have to happen? No. But that is the guideline that we want to be paying attention to. Now, if we take a look at what's going on an intraday base out here, let's take a look at the 240-minute chart. 240-minute, 4-hour chart out here. What we're going to see is that the resistance level now on its intra-session-ish type time frame becomes 16,994. That's the red horizontal line going across my screen. The point of control, the support area, 16,907, 16,896. Very key here that if, in fact, we see continued move lower at 16,896 holds. That doesn't mean that it can't be pierced, but you want to see it close above 16,896 out here. And that's inside the Dow futures. They're currently trading out at 16,941 as we speak. So you're talking about 16,896, a test of about another 50 points or so. So we get back. Let's go take a look at the Dow futures. Let's just stick with this for a moment. Let's go take a look at its 120-minute chart out here. Let's go see what we can see. Right now, Dow futures off 34, S&P down 4.5, NASDAQ off 7.25. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hope everybody out there had a great 4th of July celebration out there. Welcome back. Let's go check out these markets. Now, we were looking at the Dow futures during that first segment. I said we'd take a look at some intraday charts out here just to get a feel for what the Dow futures are doing. Now, what's cool about some of the patterns that we like to trade out here, the A to B equals CD patterns. If we go take a look at what's going on, let me just flip up this chart here real quickly. Let's take a look at a 30-minute time frame inside of the Dow. So if you're wondering, why did the Dow stop at the level 1230 coming in on July 3rd? Why did it make that level out there at the 16,994? All we really need to do is switch down into a 30-minute chart out here, which we're going to do. We're going to take a look at the A to B equals CD pattern out here. Now, the A point on the Dow will take us back to a low that came in here on June 15th. Looks like the level's about 16,624. That's your A point. Your B point out here comes in at 10 o'clock in the evening out at 16,911. Makes a retracement down into a low here of the session of about 9:30 in the morning on June 26th. You can see price makes a 1-to-1 A to B equals C. It gets just a little bit above that area. Of course, if we put up the, let's do this here, let's put up the overbought, oversold indicator, relative strength indicator, you're going to see that as it was making that high, it was making that high and doing what? Getting extremely, and I do mean extremely overbought. That was, of course, going into the shortened trading session on Friday out here. And let's just take a look at a 30-minute time frame chart. You can see the last time that it had gotten up into that same type of overbought level, that's in the 80-ish, plus 80-ish type zone out here of that relative strength indicator. That took place back at the time frame about 2 o'clock in the afternoon on July 1st. Of course, when you get into an overbought condition out here, what the market likes to do is work that condition off. It doesn't want to really two ways. The overbought condition is going to do it by moving sideways. That's bullish. Or retracing, which can also be bullish, so long as it's pulling back on light volume out there. Well, what took place between that session on July 1st? Well, we can say that July 1st, it moved and it worked by moving just sideways, worked off that overbought condition, recharged its batteries, and then on July 3rd decided to go ahead and make higher highs out there. Of course, it stopped after it had formed that 1-to-1 A to B equals C. It got a little bit above that area, but also did what? When you take a look at the relative strength, the reading out there got into the 86, 87-ish type level out there. And then just simply here has been moving sideways. So even though Dow futures are down about, 35 to 40 points. Let me just see where they're actually at right now. Down 35 points as we speak right now. It's really just working off an overbought condition. And if we put that reading back up here on my chart, if we take a look at, you can see how right now price is moving along the lower edge, the oversold-ish type range out here. So that's what's going on the intraday time period, and that is for the Dow futures. And we want to pay attention to the Dow futures. We also really want to pay attention to, hey, what's going on inside of the NASDAQ. If we take a look at the NASDAQ futures out here, why the NASDAQ? Because it's been the strong indice out here. Remember, it was the weak one that moved the market down. In fact, it's moved the markets now back up, and so we want to be paying attention to what happens with regard to strength out here. In fact, if we take a look at the NASDAQ, what we know about the NQ out here, just simply we were taking a look at the FTSE. So we began the show by looking at the FTSE and looking at its consolidation. If we take a look at the NASDAQ here, and we take a look at its consolidation pattern, it broke out of it. It broke out with what? With a wide-ranging bar. Take a look at that bar here, the trading session of June 5th. That's how you break any type of pattern. That's how you actually break out to the upside. That's exactly what took place inside the Dow. Now, the Dow, inside the NASDAQ. The NASDAQ has been trading in a 300-point consolidation range, give or take a few points out here. The bottom of the consolidation range being Uncle Ben Bernanke Day, by the way. That was December 18th. That's when that was his last going-away party out there. They had the bulls out in force. That is the low of about 34.14. That level has been tested 2 other times, and in both instances, well, when it came down here on February the 5th, that candle session, little doji candle out there, and doji at highs mean more to me than they do at lows, but it's a sign that a market is tired. It's that next trading session when you had that nice little wide-ranging bullish engulfing candle that said, okay, those lows are going to hold. The last time that you saw the NASDAQ down at those levels was back here on April the 15th. Nice wide-ranging bar, nice price movement on that trading session. So now what we know about this 300-point consolidation is that the NASDAQ futures have a measured move price objective of about 4,100 points. They're trading at 3909.75. Only if we get some type of reversal signal here inside of the NASDAQ is that likely not to happen. 877-927-6648. That's not what we see right now, though. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow trading down 60 points out at 17,008. S&P off 5 at 1979. NASDAQ Composite down about 10 points at 44.76. Russell off 5 points this morning. NDX 100 down 5. New York Stock Exchange off 46 points. New York Stock Exchange is got some weak links involved with it. All it actually needs today is 4 net declining issues in order for the bears to actually take control of its market. A lot of time left in the trading session out here. Popping to the upside, we've got Biodelivery Science. BDSI is the ticker symbol. Looks like some positive results from a phase 3 trial out here. Let's go take a look at it and see where it's moving to. Gapping up this morning above recent set of swing points out here. It actually looks, if we take a look at this chart here, it actually looks a little bit like gold, the gold chart out here. What do I mean by that? This nice wide-ranging bar here breaking through a resistance zone back on the trading session of June the 11th. The resistance zone being the market profile out here, as well as swing points. Had some nice volume on the on that move up. The following day had volume as well, so it had some follow-through up there. That's more of an initiation move than an exhaustion move out here. Price, of course, got into that extreme over bought condition. You can see that by the bottom panel on my chart out here, and it worked that condition off by moving sideways out there. So that means I've got to go take a look at gold for you, and we'll take a look at that pattern. So we'll certainly do that. Now, where is this headed to? Let's go pull this back. Got good volume behind the move this morning. 1.6 million shares thus far. Looks like this is at all-time highs. Let me just make sure. Let me put this on a weekly chart, see if there's any other data back out here. Yeah, there is most certainly. Yeah, it's at all-time highs for sure. So if you take a look at where this might head to on a weekly chart, let's just look at the A to B equals CD pattern. That's going to be the easiest thing. The A point's going to be all the way back here around the week of December 26, 2011. The B point is a swing on it. Boy, take a look at how that B point, we'll take a look at that in a moment, how that was taken out with wide price spread and accelerated volume. And the C point is down here on February 5th, the week of February 25th, 2013. Now, the B point out here, $6.89. Now, when you see a swing point, in this case here, a B point of an A to B equals C to the upside. You like to see him taken out with accelerated volume and wide price spread. Well, if you go to the actual week here of the trading session of January 20, 2014, look at that wide price spread. Now, that is a nice bar out there, and volume behind that move was 17 million shares, was taking out a high that had 1.5 million shares, a swing point that had 1.5 million shares. So then price just simply on the weekly chart moved sideways, pulled back to the breakout area. Interestingly enough, if we pull this back, where it pulled back to was the top of the top of the signal box out here, and it pulled right back to its market profile old resistance level, which looks like it was priced right around the 669, 670 level. The actual pullback or retracement on the weekly chart was 671. The week ended February 14th, and the volume behind that move was 1.6 million shares on a pullback, going against a breakout with 17 million shares. Now, what's it done here price-wise? Well, it got above the 1.272 level with what? With wide price spread, accelerated volume, the whole bit. This thing is had a little rocket ship. Likely its next stop is right around the 1576 range. That will be its 1 to 2 A to B equals CD, and typically when you do a 1 to 2 A to B equals CD, the move is over for a bit, so expect it to consolidate up at that level. That is on the ticker symbol BDSI, Biodelivery Sciences. Let's go take a look at what else we have that is moving out here in the marketplace. Let's look at Infosys, INFY. That's up about 3%, up $1.59 today. That is trading above its resistance level of its market profile as well as its most recent swing point. But I can see a lot of resistance out here inside of this equity, INFY. First piece of resistance takes us back into the trading session here. Well, let's go back a little bit further left on the stock chart. Its supply line began, meaning on the way down. This thing moved down on March 12th with 5.7 million shares. Now, that day itself had a high of $59 and a low of $54 out there. So nearly a 10% drop, or at least a 10% drop, right? Just in one day, but with volume. It says that any of those shareholders are the ones that are stranded up higher out there. They're kind of saying, boy, I'd like to get my money back. That's why getting above that low of 54.11 would be very important to really change the trend of this stock. Otherwise, those folks are just going to want to get their money back, and they're going to want to get out of INFY out here. So expect its move to really, and you can see the consolidation, kind of a consolidation out here inside. This is really between the levels of about $55.83 down to this little hammer low on the trading session of May 7th out at about the $50.46 mark. That is on ticker symbol INFY. That is Infosys Limited. How about to the downside? We've got Netflix right now leading the charge to the downside out here. Let's go see what it's doing on its stock chart, see where it's trading. Now, we saw Netflix move up with a nice little sign of strength here on July 1st. Volume behind that move was 5.4 million shares out there. It is up above its swing point here. Its swing point high, all-time swing point high, February 25th, I believe. Let me pull this back and make sure that Stevie's right about that. Yeah. The actual swing point looks like maybe the trading, 458. Trading session of March the 6th out here. That had volume of 1.6 million shares, and it got above it with 5.4 million shares. So at the moment, Netflix looks like it is in a confirmed larger, is it an A to B equals CD pattern? No, just really a consolidation pattern is what it's in. And this thing has been consolidating, so you can figure out what the measured move is so long as it's able to stay above the upper portion of its range. That's at the 458 area. So the bottom of the consolidation, we're going to use a price level here of about 300, 299.50, the trading session of April 28th. So we're going to call 300 to 458. So you're looking at a 158-point move on top of the 458. That takes you up to about 600. So long as Netflix can stay above 458, that's the upper side of its range right now, then it offers the promise of a measured move up into that 600-ish type range out here, and that is on Netflix. NFLX is the ticker symbol out here. Dow is off 71, S&P down 7 points right now. Let's go check out one of our favorite currency pairs out here. That is the Euro-Japanese yen. Euro-Japanese yen right now trading out at 138.47. It's dealing with a little hammer candle out here. So what we know about the Euro-Japanese yen, or what I know about it, now you know about it, is it's trading below a B point of a potential A to B equals CD to the downside. And this is a 120-minute time frame that we're looking at. That B point, by the way, is a low from 5 a.m. That took place here on July the 4th. The currencies were trading out there while you were barbecuing, ribs and chicken and burgers and fish and corn on the cob, of course. That low, 138.57, we can see that level was broken. Now, when it's broken here, the interesting thing, meaning it closed below that area, well, it actually didn't close below that area on this 7 a.m. hammer candle out here, but that hammer candle continues to be tested. What's a hammer candle? Well, it's where you've got bulls out there that are trying to defend their territory. It is a single candle. It is a bullish candle out here, and of course, you know my expression on a hammer candle, if you see it close below it, if you're long, you're wrong. What does that mean? Well, it means one of two things out here. It means either we'd see the Euro-Japanese yen move down to about the 138.17 level, between 138.17 to the actual low of the swing point from 11 a.m. on the trading session of June 26 out at 137.91. Why is that important? Well, if that hammer candle fails, that hammer low fails, this next session, by the way, this 2-hour chart here does not complete until 11 o'clock. But so far, that hammer has held. If the hammer's going to hold, you'll probably see these markets here also bounce at some point inter-session out here. So that is an important area, that 138.47 out here inside of the Euro Japanese yen. Let's take a look at the metals. Let's go see what we have going on out here. You've got gold is down $5 right now. Not a big deal out here. Let's go take a look at it. Remember, I took a look at what was the stock chart? I think it was BDSI, Bio Delivery Sciences. And in Bio Delivery Sciences, I said, hey, that chart looks a lot like Goldilocks out here. And if we take a look at gold, let's take a look at its market profiles. Let's look at the daily chart. You're going to see a similar type pattern out here. Here's that wide-ranging bar that we see inside of Goldilocks from June 19th. Does what? Gets into a overbought condition. It's been moving itself sideways out here. 1312 is very, very strong support. That is a large congestion area. That is the point of control. That level has been tested several times. June 26th, June 27th, June 30th. July 3rd out here, and again this morning. So breaking at 1312.90 is right now is a very difficult thing for Goldilocks to do. If she does break that area, 1299.20 is likely the area where it will fall back to. Of course, ultimately, an ideal trade might be price moving all the way back into the breakout session. That would be somewhere around the lows in June 19th, right around the 1276 mark. But right now, This pattern here, this chart looks very much like bio-delivery sciences. Again, just to show you that chart, let's go take a look at it. We'll put that back on the screen out here so you can see chart similarities. Here you've got, now the one thing that bio-delivery sciences had is on that first bar, that first wide-ranging bar, it also had follow-through on that very next trading session. Nonetheless, it's still a chart that is very similar to what we were taking a look at inside of Goldilocks out there. Let's go take a look at light sweet crude. Let's go see what light sweet crude is doing out here. Traded out around 103.71. Let's look at its daily chart as well. It's trying to get down and test its support level of its market profile, not until it cracks 103.48. And when I say crack, I mean a close below. I don't mean 103.47. I mean a close below. Let's just give it the number of 102.75 out there. If we were to see light sweet crude close at around 102.75, that would indicate to me that we're seeing a potential change in trend. And so long as the old resistance level, the current, I should say, market profile at 105.10 holds as resistance, that would really be what the message of that pattern is. But at this stage here, price has, you can see the market profile lows. We saw those areas tested. Well, they were back here in the time frame of May 29th. So from May 29th to about June the 7th, June the 6th, those areas were being tested. There was actually a little bit of a close below that level, and then boom, it gave it back up. It gave up those lows, moved higher on June the 9th out here. So 103.48 is an important area for light sweet crude. Let's take a look at, let's see what else we have moving inside the marketplace out here. There we go. Let's switch over to this tab. Let's take a look as we have Netflix to the downside, Amazon to the downside, Wynn Resorts. Let's see if we can find something that we haven't looked at here for a while. Let's take a look at Western Digital, WDC out here. Let's go see what it is doing right now, trading out at $94.60. However, let's see, it made a high here on Friday. Of course, volume, we really can't be paying much attention to Friday's volume. Western Digital did take out the swing point from April the 4th. Now, that had 2.5 million shares, but it was taken out with volume of only 1.6 million shares. It is right now back inside the lower part of its range. What do I mean? I mean that little key reversal session, that trading session from April the 4th out here, it's back below its high. That high was $95 even, Steven. If it cannot stay above that $95 level today, we should expect Western Digital, WDC, to pull back probably to, let's see here, where did the last breakout? Okay, so its last breakout took place here on June the 5th. So anywhere, so the pullback should move back to 92.11 first. That has 4.3 million shares. If it's pulling back with more than 4.3 million shares, it says that price will then go test the low, or should test low at 86.92 out there. Its market profile low, 89.73. So now, if as long as it holds that area, if it's pulling back on light volume inside of Western Digital, that actually may provide a little buying opportunity. If you take a look at a little trend line out here as well, we can draw a trend line coming off of the low out here from the trading session of May 9th. That trend line would, I should have done that a little bit better here. Let's see here. That trend line looks like about this. Let me pull it back. Excuse me. Whoops. There's the trend line as well. That may be all that she pulls back to 235,000 shares today. So you got a little trend line coming off of the lows out here, but I would really be using the horizontal level of support on this, and it would be that little breakout session from June the 5th. That is on Western Digital. WDC is the ticker symbol out here. A quick check back at the Qs. Let's go see what the NQ is doing on its different time frames out here. Let's see what the 240-minute chart. Let's look. 240-minute chart. Right now you've got the Qs. They're trading out at 39.09 out here, right into its congestion area, that little point of control level. 877-927-6648. We'll be right back, folks.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. A little pressure here in the market here this morning. The Dow's off 55 points. S&P is down 6. Now, lead the charge to the downside here. You got the Russell 2000 as well as the New York Stock Exchange. So the New York Stock Exchange, that composite exchange, is down 55 points. But more troublesome is that you've got declining issues, 1,997 right now, outpacing advancing issues by more than 2 to 1 out there. You've got 1,122 net declining issues. As I mentioned at the opening of the show, all that's needed in order for the bears to actually take control of the New York Stock Exchange, that means at the end of the day out here, is to see net declining issues of 4 or more out there. So we know that that's something that we want to pay attention to. Of course, we also want to pay attention to the VIX index out here. The question is, what things would it be that could take us into a large retracement decline out here? Really, a couple of things that could do it. Number one would be the VIX. Let's take a look at the VIX index. Right now, it's up 9%. So interestingly enough, up 9%, up 95 cents here this morning. Now, being up 9%, that's not such a big deal out here. It's trading at 11.27. If you're watching us on Tiger TV, you can see my VIX chart, and going across the top of the page is the VIX index. Going across the bottom of the page is the S&P 500. And if we take a look at that 50-day exponential moving average, that is really key, and the price level there is 12.06. Of course, if price gets up to 12.06, heck, it doesn't have to even get much further. It needs to get up to about $11.50 or so. You'll see a one-day rate of change in the VIX of more than 10%, and oftentimes what happens there is within the, not oftentimes, like 70-80% of the time out here, you'll see a nice bounce in the marketplace, at a minimum bounce in the marketplace the very next trading session. Sometimes it takes 2 days out there. But we're not there yet. We do know that we're paying attention to that 50-day exponential moving average, and that's at 12.06. If price gets above that, what you can expect is you can expect some significant damage inside of the marketplace. It has worked that way so well for so long. We can just use that as one of our guides out there. So at this stage here, the VIX, even though it's got a nice little pop to the upside, it's still in a full-blown bullish mode out there by traveling below that 50-day exponential moving average out here. If we take a look at the larger picture inside of the euro, Japanese yen, let me go do that out here. Let's take a look at the daily chart here. Now, the daily chart, and so what is it that could drive the VIX above that? Well, it could be this currency pair. That hammer could be taken out. That hammer could be taken out. If you take a look at the euro, Japanese yen, you can see a nice little 0.618 Gartley sell pattern. Actually worked to the T on July the 3rd out here. As price moved up to a high out there at 139.26. Formed a nice little Gartley sell pattern. You had real nice confirmation here on July 4th. Nice big bear sash, bearish engulfing candle, and engulfed the prior 3 sessions out here. That was sending the signal that it wants to move lower. Well, we took a look at the intraday chart out here. I'll punch that back up on my screen right now. Here, in essence, is what it looks like. So now here's a blown-up intraday chart. But you've got this little hammer candle, that low out there at the 138.47 mark. If we see a close below that, that says that price wants to move back to most likely the 0.786 area, and then you should see some additional pressure inside of the market. So that's where we're at right now. As long as this area holds, that is more bullish than it is bearish, and if it fails, expect to see lower prices inside of the indexes. The problem is here with any moves lower today is that it's a Monday after July 4th. It's hard to believe that we're going to see substantial volume as we speak today, but we'll know so by the end of the trading session. Folks, it is magical, magnificent Monday. Have a great day. Thanks so much for joining us. I look forward to seeing you soon, like bright and early tomorrow morning, or in about 8 to 10 minutes. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.